Friends, welcome back to Education Path. In this videos we will be discussing about the differences between money market and capital market. So let's get started. The capital market is for long-term securities. It is a market for those securities which have direct or indirect claims to capital. Capital market is referred to as a place where saving and investments are done between capital suppliers and those who are in need of capital. The capital market works under full control of securities to protect the interest. The capital market includes both dealer market and auction market. It is broadly divided into two major categories, primary market and secondary market. Primary market, a market where fresh securities are offered to the public for subscription, is known as primary market. Secondary market, a market where already issued securities are traded among investors, is known as secondary market. Capital market functions. It acts in linking investors and savers, facilitates the movement of capital to be used more profitably and productively to boost the national income, boosts economic growth, mobilization of savings to finance long-term investment, facilitates trading of securities, minimization of transaction and information cost, encourages a massive range of ownership of productive assets, quick valuations of financial instruments. Money market is a financial market in which only short-term debt instruments, maturity less than 1 year, are traded. is for transactions in wholesale short-term loans and deposits and for trading short-term financial instruments. The money market, extremely liquid financial instruments are traded, i.e. monetary instruments of short-term nature are dealt. Major players in the money market are central bank and government, primary dealers / market makers, banks, non-bank financial institution, money market funds and corporate money market brokers. Trade credit, commercial paper, certificate of deposit, treasury bills are some examples of the short-term debt instruments. Functions of money market. Money markets serve 5 functions: to finance trade, finance industry, invest profitably, enhance commercial banks' self-sufficiency, and lubricate central bank policies. Money market is used for the purpose of short-term borrowing and lending, whereas the capital market is used for the long-term assets, i.e., the assets which have the maturity of more than 1 year. Types of instruments involved. Money markets generally deal in promissory notes, bills of exchange, commercial paper, T-bills, call money, etc., whereas capital market deals in equity shares, debentures, bonds, preference shares, etc. Nature of market. Money markets are informal. On the other hand, capital markets are more formal. Liquidity of the market. Money markets are liquid, whereas capital markets are comparatively less liquid. Conclusion. The main aim of the financial market is to channelize the money between parties, in which money market and capital market help by taking surplus money from the lenders and giving them to the borrower who needs it. Millions of transactions take place around the world on a daily basis. Both of them work for the betterment of the global economy. They fulfill the long-term and short-term capital requirements of the individual, firms, corporate and government. They provide good returns which encourage investments.